as manufacturing production, exports, and imports have begun a U-turn. Earlier today, the Philippine Statistics Authority reported that the labor market has also begun to improve. The unemployment rate went down to 10% in July from 17.7% in April. The decrease in the unemployment rate means that some 2.7 million jobs returned as the quarantine level eased. In addition, some 4.9 million workers rejoined the labor force. All in all, 7.5 million jobs were restored. The 5 sectors that saw the most number of returning jobs are in trade, agriculture, construction, manufacturing, and transport. These sectors directly benefited from the relaxation of quarantine measures and are important contributors to job and GDP growth. On the other hand, the underemployment rate, which measures those with jobs but lack income, decreased to 17.3% in July from 18.9% in April. Government programs to provide income support to workers through the Small Business Wage Subsidy Program and to low-income families through the Social Amelioration Program have contributed to the moderate increase in the underemployment rate amid the crisis. The July survey figures show a direct link between the level of quarantine, restriction, and labor market outcomes. In the first half of May 2020, around 78.8% of the economy was placed under the ECQ. As a result, GDP and unemployment worsened to record levels. In contrast, in the first half of July 2020, only around 2.1% of the economy was placed under the ECQ. The result is a significant reduction in the unemployment rate and the return of some 7.5 million jobs. These data show that the government has responded to the needs of the people and will continue to do so. The next slide shows a map of how the distribution of quarantine status was around May when the labor force survey was first conducted for the second quarter. And the second map shows the quarantine status in July, which shows a significant relaxation from the red ECQ, the yellow MECQ, to mostly GCQ or MGCQ. In the coming months, better GDP and job numbers will hinge on how open the economy is. This entails a better strategy to prevent, detect, isolate, treat, and recover, or the PDITR strategy. It also requires a safe and sufficient number of public transportation that, if needed, is supported by service contract subsidies. Without the public transport system backed sufficiently, many people cannot go back to work. To illustrate, under GCQ, the share of the NCR economy that is allowed to open is around 58.2%. But without sufficient public transport, it falls to around 35.5%. To bounce back from this crisis, we will need to open the economy even more. This will depend on everyone working together to adhere to health standards as the government accelerates the implementation of the recovery program. To improve growth and job prospects, the government's recovery program includes, first, the recent passage of the Bayanihan 2 and upcoming complementary measures, the infrastructure program, and the 2021 budget. All three are needed to preserve current jobs, create new jobs, and prevent families from falling into poverty. Bayanihan 2 principally aims to support the healthcare system, enhance testing, tracing, isolation, and treatment, which are crucial to boost confidence, get people back to work, and restore consumer demand. Third is to support public transport. Fourth is to support critically affected sectors. And the fifth is to provide capital infusion to government financial institutions to allow them to lend to more small businesses and help smaller banks help more micro enterprises. To support income and jobs, Bayanihan 2 provide relief and assistance to households and businesses through programs such as cash subsidies for low-income households and unemployment or involuntary separation assistance for displaced workers, including public utility vehicle drivers, funds for hiring 50,000 more contact tracers, grace period for outstanding loans, Grace period also for the payment of rents and utility bills, and condonation of pending payments of interest, penalties, and surcharges for agrarian reform loans. To complement these programs, the passage of the guide, FIS, and create bills are also needed, which Assistant Secretary Lambino will explain. For the next year, the 2021 budget will take the leading role in our recovery and resiliency program, which Assistant Secretary Toledo will explain. Alongside Bayanihan 2 is the infrastructure program. The Duterte administration is committed to accelerate countryside development, regional connectivity, and job generation through the Build infrastructure program. From 4.2% of GDP in 2020, infrastructure spending will grow to around 5.4% of GDP in 2021, creating in the process some 1.1 million full-time equivalent jobs, and with a multiplier of around 2 will help us achieve the 6.5 to 7.5% GDP growth target next year. To conclude, the progress we have seen in the health sector and in the economy is encouraging. This motivates us to do more and better, and is a testament of all the hard work that all of us, especially frontliners, have given. Through our collective efforts, I believe that we will be able to recover as one, come out stronger, more resilient, and become better as a country and as individuals. Thank you very much.
Thank you, Secretary Carl. Now let me call on Assistant Secretary Tony Lambino from the Department of Finance to give a statement.
Thank you, Director Neris. Thank you, Secretary Chua. Good morning, everyone. On behalf of Finance Secretary Carlos G. Dominguez. The jobs report released today underscores the scale of our present challenge. The lockdowns have protected millions of Filipinos from getting infected with COVID-19, but at a significant cost to the economy and employment. At the start of the pandemic, when we knew very little about the virus and how it spreads, the lockdowns were necessary to save lives and protect communities. Indeed, countries like Sweden, which kept their economy almost entirely open, nonetheless suffered record economic slowdowns. Our lockdowns saved an estimated 1.5 to 3.5 million Filipinos from catching COVID-19 and bought us time to strengthen our healthcare system. We have outpaced many other countries in preventing deaths from COVID-19. The global average mortality rate is now at 3.4% of confirmed cases. Ours is at 1.6%. But every life lost to the pandemic is still one life too many. As we continuously expand our health capacity, we must also increase our sense of confidence by making sure the Filipino people are well informed about how to reduce the risk of infection. Most of the risk can be controlled through the right behaviors, such as wearing masks and face shields, frequent hand washing, and social distancing. Lockdowns will be more specific at the workplace or community level so that businesses and workers in less affected areas will be able to continue operating. Our progress on the public health front has also allowed us to devote more attention to the economic costs of the pandemic. Over the past months, we have taken the necessary steps to protect existing jobs and replace lost ones. In the early months of the crisis, we provided relief to millions of vulnerable households and employees of small businesses. With the congressional approval of the Bayanihan to Recover as One Act, more help is on the way. Bayanihan 2 contains 140 billion pesos in new interventions, including cash for work programs, skills training, social assistance programs, funding for agriculture, tourism, transportation, and education sectors, and more lending programs to help businesses survive. It is important to emphasize that the capital infusion of 39.47 billion will have an estimated multiplier of around 10. So it is worth more than 390 billion to our economic recovery efforts, especially to the business sector with a focus on small and medium enterprises. The urgent passage of the corporate recovery and tax incentives for enterprises, or CREATE Act, will also provide businesses of all sizes with more resources to retain current workers and eventually create new jobs. CREATE will immediately lower the corporate income tax rate from 30 to 25%, providing businesses an instant boost in their fight against COVID-19. From 2023 to 2027, CREATE will gradually reduce the corporate income tax rate to 20%. CREATE also modernizes our outdated incentives menu, establishing a new regime that emphasizes job creation, countryside development, knowledge transfer, and greater value added. CREATE will enhance the flexibility of our incentive system so that we can aggressively go after the investments that will greatly benefit the Filipino people. The DOF estimates that an additional 900,000 jobs will be created over the next decade due to reduced corporate income tax rates. And a DOLE study estimates the creation of even more jobs. The availability of financing for businesses and the continued strength of our banks will also be critical in protecting jobs. The Financial Institutions Strategic Transfer Act will allow banks to dispose of non-performing loans and assets through asset management companies. The bill proposes improved versions of the special purpose vehicles created in the 2000s in response to the Asian financial crisis. FIST will enable banks to offload souring loans and assets, clean up their balance sheets, and extend more credit to more sectors in need. The Government Financial Institutions Unified Initiatives to Distressed Enterprises for Economic Recovery Act, or the GUIDE Act, will enable government financial institutions to form a special holding company that will infuse equity with strict conditions into strategically important companies facing insolvency. This will prevent these firms from closing down and help them keep their employees. CREATE, GUIDE, and FIST are all under discussion in the Senate. President Duterte requested the immediate enactment of these bills in his recent State of the Nation address. Hopefully, the Senate can approve these reforms soon. While funding the job-creating Build infrastructure program, the 2021 budget will also provide us with the tools necessary to rebuild our economy and decisively defeat COVID-19. Assistant Secretary Toledo will discuss this in more detail. As congressional deliberations begin soon, the timely passage of the budget is crucial to our economic recovery and to job creation. The Duterte administration will not rest until we get Filipinos back to work. Thank you very much.
Thank you, ASIC Tony. We will now hear from Assistant Secretary Rolando Toledo from the Department of Budget and Management.
Okay. Thank you very much, Director Naris, and to my fellow colleagues in the government, to our friends from the media, and to the Filipino people watching today, good morning. On behalf of my Secretary, Wendell Abisado, we give this statement that repercussions from the onslaught of the COVID-19 pandemic have been largely felt across all sectors in the country, including, of course, the workforce. The result of the labor force survey, although unfavorable, serves as a call for the national government to beef up its support for the implementation of programs and projects that aim to protect the welfare of workers and generate job opportunities. Despite the current health crisis, government spending has remained robust as we continue to finance various COVID-19 response programs. In fact, we have already disbursed 2.01 trillion for the first half of the year. That is up by 26% when compared to the same period last year. This uptake highlights our commitment to revive and accelerate the infrastructure program, which helped boost employment generation and preservation for the remainder of the year. Thanks to the passage of the Bayanihan to Heal as One Act, we're also able to shore up resources and release 389.06 billion to finance critical COVID-19 interventions. Of this amount, around 63.59 billion was released to support the employment sector. This includes 51 billion to the DOF SSS for the Small Business Wage Subsidy Program, 7.44 billion to the DOLE for their COMP and TUPAD programs, and 5.15 billion to DOLE OWA to augment their emergency repatriation fund. As of date, most of the target beneficiaries, including displaced workers and repatriated OFWs, had been served. Our efforts to provide budgetary support for COVID-19 interventions do not stop here. We're also ready to infuse 140 billion more to the economy for the implementation of the Bayanihan 2 bill once signed into law. Similar to its forerunner, the Bayanihan 2 will cater to displaced workers through the implementation of cash for work programs and provision of unemployment assistance. This stimulus package will also open up employment opportunities through hiring of additional healthcare providers and contact tracers. Moreover, Bayanihan 2 provides some 39.47 billion for capital infusion to government financial institutions to support their lending programs for private businesses and MSMEs. This aim to promote employment preservation and generation by addressing cash flow constraints of businesses. Now, beyond 2020, we also believe that government efforts must be sustained to fully address the impact of the pandemic and accelerate economic recovery. That is why we're proposing for a 4.506 trillion national budget for 2021. This will focus on containing the spread and mitigating the effects of the virus while restarting the economy to help the nation reset, rebound, and recover from the COVID-19 pandemic. The biggest share from the proposed fiscal year 2021 budget will be provided to social services sector amounting to 1.65 trillion and the economic services sector with 1.35 trillion. Through the national government programs that will be implemented under these sectors, we hope to regain the losses in our labor and employment. For this to transpire, we aim to generate some 140 to 220,000 jobs next year and catalyze business activities by restarting and accelerating the Build, Build, Build program. Hence, a hefty amount of 1.11 trillion will be allotted for infrastructure development, which is expected to stimulate economic rebound. We will thus continue to provide budgetary support for the big-ticket projects of the Department of Public Works and Highways and the Department of Transportation. To boost economic recovery and help local businesses and workers adapt to the post-pandemic life, the proposed 2021 budget will also support programs that aim to help them recover from the COVID-19 crisis. Workers displaced and repatriated due to the pandemic will be given assistance, primarily through the Livelihood and Emergency Employment Program and COVID-19 Adjustment Measures Program of the DOLE. A total of 13.54 billion will be set aside for these interventions next year. To promote digital upskilling and the retraining of workers, we will also be providing 3.6 billion for the Training for Work Scholarship Program and 1 billion for the Tulong Trabaho Scholarship Program. Additional 50 million will also be appropriated for the provision of mobile training laboratory tracks, which will bring free quality skills education and training to remote areas. Farmers and fisherfolk, meanwhile, will be supported through programs that target to improve their skills and productivity. This include irrigation service activities of the National Irrigation Authority with 31.5 billion, the National Rice Program with 15.7 billion, the National Fisheries Program with 3.5 billion, and the Rice Competitive Enhancement Program with 10 billion, among others. Local businesses and MSMEs will also be assisted through recovery programs, including the MSMEs Development Program costing 2.3 billion and the Pondo sa Pagbabago at Pag-asenso Program amounting to 1.5 billion. The competitiveness of local industries will also be strengthened mainly through the 511 million allocation for the Industry Development Program of the Department of Trade and Industry. We just like to say that we crafted the proposed fiscal year 2021 budget on the sound fiscal policy spending within means, on the right priorities, and with measurable results under the regime of transparent, accountable, and participatory governance. The latest data we have on unemployment turn out to be much worse than what we are expecting. But moving forward, we're all committed to work together to enable the return to the pre-COVID levels of employment. Rest assured that necessary measures are being put in place to gain back our losses and ensure a rapid economic recovery. Thank you and good morning.
Thank you, ASIC Rolly. So we now proceed to the question and answer session. Some reporters sent questions in advance, and we will tackle these first. I've grouped questions into the following. First is on specific figures on employment generation and loss. Second is on projections and prospects. Third is on OFWs and the global labor market. And the fourth is on government interventions and programs. After each set, if there's anyone who has a related or follow-up question, you may either raise your hand and unmute yourself or just write in the chat box. So the first set of questions is on employment generation and loss. From Warren de Guzman of ABS-CBN News Channel, do you have the latest data on jobs created by Build this year or during the lockdown? What about jobs preserved or created through the low-interest loans granted to COVID-19 affected businesses? And how many contact tracers have been hired? How much are they earning? This, a related question is from Claire Yao of Bloomberg for DTI and DOLE. How many establishments have shut temporarily or permanently due to the pandemic? And how many workers have been laid off? And finally, from Melissa Lopez of CNN-PH, for Secretary Chua, do we have data on how many companies closed temporarily and permanently during the period? Of the unemployed as of July, how many can we expect to be able to return to working? So may we have Secretary Chua first?
Thank you very much, Director Neris. Hi, good morning also to Secretary Bello. Let me frame my answer first on the data. We are using right now, good morning, sir. We are using right now a household-based survey called the labor force. In addition to that, we can also measure the jobs from administrative data that are reported to DTI and DOLE, for instance. And the third one is to estimate jobs from related data, such as the input-output table. So these are the various sources that we can use to determine the impact of the pandemic on jobs and employment. So for today, we are reporting the labor force. And based on the data that we are seeing, especially from the analysis that we've made, on the infrastructure, we estimate that some 1.1 million jobs are being created this year because of the build, directly and indirectly through the multiplier effect. Next year, it will be bigger at 1.7 million, both the direct and the indirect. Now, of course, there are also differences between jobs and employment. A person who is employed can have 2 jobs or 3. or part-time. So these are the nuances that we have to be careful about. But the general direction that we are seeing is that between April and July, as we see the virus pandemic more contained, as we see the quarantine status relax more, we are seeing significant restoration of jobs, estimated at 7.5 million as of July from the labor force survey. We expect that the improvements continue, and that will depend on three things. Number one is the restriction or the level of quarantine, and that will depend on the cooperation of everyone to meet the minimum health standards. Number two is basically improving our testing, tracing, isolation capacity so that we can care for those who are infected and those who get sick, and so that they will not infect others. And the third one is the extent to which we open the public transportation. If we achieve all these, we will see 2.4 to 2.8 million additional employment next year. That will allow us to lower further our unemployment rate to around 6 to 8% by next year. So this will be a gradual lowering. We know that there are some sectors that will not recover as fast as possible. But this result that we see in the July survey shows that our policy direction and actions are actually showing results. Thank you. Perhaps I can request Secretary Bello for some of the administrative-based data and update. Thank you.
Secretary Bello, I think
Sec. Rolly, nandiyan ba si my partner, Sec. Mon, ng DTI? Anyway, Sec. Carl, I have to move out immediately because I'm in another webinar meeting. And anyway, to address yung concern about the labor force situation, I have Assistant Secretary Nikki Tutay of the Bureau of Local Employment to address all these issues. And before I leave, Sec. Carl, Sec. Rolly, si Tony Lambino ng DOF. Good morning and see you later.
Morning, Sec.
Nikki, take over, please.
Thank you, Sec. Carl and Secretary Bello. With the permission of Secretary Bello po, the question asked was about how many establishments have shut down temporarily or permanently. So as of 30 August 2020, there's about 83,654 establishments who reported under temporary closure with about 2 million workers. 28,881 establishments are under flexible work arrangements with 1.2 million workers. Meanwhile, about 9,548 establishments with 180,200 workers have either retrenched or closed permanently, affecting 180,207 workers. So these are administrative data based on establishment reports submitted to the Department of Labor and Employment. But we would like to state that we are very much happy with the improvement of our labor market situation compared to April 2020. So as Secretary Carl have mentioned, with a gradual opening of the other sectors, we expect that employment situation in the country will recover hopefully by next year. Thank you.
Okay, thank you, Sec. Nikki. If there are no follow-up questions on that, so let's now proceed to the next set of questions on employment projections and prospects in the remaining quarters and for next year. I will just read the specific questions. From Claire Yao of Bloomberg, how long-lasting do you think this unemployment spike will be? And do you see this deteriorating our macro fundamentals? From Ted Cordero of GMA News, can we expect that employment figures will improve next year as we expect that the economy is set for a dramatic recovery post-pandemic? Do you have projections for the employment, unemployment, and underemployment rates in 2021? And from Ralph Rivas of Rappler, any projections when job figures will go back up and when it will be back to pre-pandemic levels? And finally, from Stanley Gahete of Kyodo News, Japan, how do we see the demand or number of Filipino applicants against the number of available jobs this time of pandemic? Will the number of available jobs satisfy the number of jobless Filipinos to solve the current issue of unemployment? May we hear first from Secretary Carl.
Thank you very much, Director Neris. First of all, the projections are based on what actions we take collectively to address the pandemic. We all know right now that this virus is not going to disappear quickly. It will stay with us for some time. And the vaccine, while being developed, is not likely to serve all 8 billion people in the world in a very quick span of time. So that is the first thing that we have to be aware of. The good news there is that I think around 90%, to my understanding, is of the outcome is based on your personal action to maintain the minimum health standards. So wearing of masks, washing hands, and isolating yourself if you have any symptom. So these are being factored in our projections. And what we saw here is that because we have been able to use the early part of the ECQ to build up our health system capacity so that we can minimize deaths and improve our critical care system, we were actually able to open the economy gradually from around 70+% of the economy under ECQ in April and May to just around around 2 to 3% in July. And that is a significant shift in our the part of the economy that is open. And so long as we maintain this pace, we can see significant recovery in the coming months. So in other words, if we are able to see a significant return of jobs, 7.5 million jobs returned in just one quarter, if we continue the level of the quarantine or improve upon it in the coming months, then we can see the improvements as we go through the remaining of the year. So with that assumption, we see the economy generating additional 2.4 to 2.8 million jobs compared to the average this year in 2021, meaning the unemployment rate is likely to fall from the average right now of around 11% after 3 quarters downwards to around 6 to 8%. We are unlikely to see any spike so long as we all cooperate and so long as the government implements in an accelerated manner the recovery program. That is why immediately after Bayanihan 2, we would like to request Congress to fast track the remaining complementary measures in the in this recovery program. So with that, thank you.
Thank you, Secretary Carl. The next question, still on projection, is from Claire Yao of Bloomberg. And this is for BSP Deputy Governor Dakila. Lending standards tightened in the second quarter, even as BSP injected more liquidity into the market. Do you see this changing in the third quarter, and why? How can the BSP better encourage banks to lend, especially to businesses, so they can so they can expand and hire more? And still for BSP, a question from Lawrence Agkawili of Philippine Star. Unemployment has risen due to the pandemic and most of the MSMEs have been affected. What is your latest non-performing loans ratio projection, and what measures are you taking to make sure banks are able to address rising bad loans?
Okay.
BSP, please.
Thank you for the set of questions. Now, let me just first point out that in response to the challenges posed by the pandemic, the BSP has undertaken several policy actions in a timely and proactive manner, including a 175 basis point reduction in the policy rate, a 200 basis point decrease in the reserve requirement ratio of banks, and the 100 basis point reduction corresponding reserve requirements of thrift banks, rural, and cooperative banks, as well as a downscaling of the term deposit facility auctions for a certain period of time, a temporary reduction in the term spread on the peso rediscount loans relative to the overnight lending rate to zero, and other various time-bound relaxation of regulations pertaining to compliance reporting, calculation of penalties on required reserves, and single borrower limits. Now, on top of this, we've also expanded the eligible instruments for compliance with our reserve requirements. And this include newly granted loans to MSMEs and critically impacted large enterprises that do not belong to a conglomerate structure. So far, what have we seen? Now, as can be expected, because of the slowdown in economic activity following the imposition of the quarantine measures, then there would also be a slowdown in the demand for bank lending. And data just recently released showed that the outstanding loans of universal and commercial banks, net of RRP placements with the BSP, expanded by 9.6% in June. This is, however, slower than the 11.3% growth in May. As can be noted, however, the liquidity that goes to production activities continues to grow. In June, there was a growth of 8.3%. Although, again, this is a slowdown compared to the 9.8% growth in the previous month. Now, what we have seen is an improvement in the liquidity situation, and that we see when we look, for example, at our various policy instruments where there has been over subscription. The bid to cover ratio has exceeded 1 for our term deposit auctions, for example. And then I'd like to note that we've seen an improvement in the amount of lending to the MSME sectors, especially coming from thrift banks and rural and cooperative banks. For example, the MSME exposures of RCBs accounted for approximately 35% of the industry's total loan portfolio of 151.9 billion pesos as of end April 2020. And the top RCBs continue to generate new MSME loans amounting to 783 million pesos during the enhanced community quarantine period. Compared to there has been a growth in the loans of RCBs by 23.3% devoted to our MSMEs, and then for thrift banks by 6.8%. And this is in response to the alternative compliance that we have allowed for reserve requirements. Thank you.
Okay, thank you, sir. Any follow-up questions from Claire, Ted, Ralph, Stanley, Lawrence, or others? Okay, if there are none, the next set of questions, or is there, would DOF want to add something, or any of our resource persons? Okay. So the next set of questions are on OFWs and the global labor market from Eileen Menchamos of Abante. And these are addressed to Dole. How many OFWs have lost their jobs and how many more will lose theirs by the end of the year? What are their job prospects abroad with the global recession? What are their job prospects here in the country? And nurses and healthcare workers have opportunities overseas. How do you feel about depriving them of that opportunity? Relatedly, Melo Acuna of Asia Pacific Daily, for Dole, with the unemployment rates, are there enough measures for re-employment or redeployment for repatriated OFWs? And for BSP, how will OF repatriation impact on remittances and how long will the peso keep its strength versus the US dollar? So can we hear from Dole first?
Okay, thank you very much, Director Nerissa. When it comes to OFWs, we are currently, our data shows that there are about 500,000 OFWs who have been affected by the pandemic. And if the situation will not be averted soonest, like at the end of this year, then we are expecting around 200 more OFWs who will be affected by the pandemic. So it runs around 700,000. There's a demand for health workers, particularly on doctors, nurses, radiologists, psychologists, and occupational therapists. And this is mostly in Europe. There's also a demand for construction and IT-related skills, both in Europe for IT-related skills and in America, specifically in Guam for the construction sector. Now, as the pandemic continues to unfold, the immediate and long-term economic effects of the pandemic across economies is yet to be revealed, but it is expected also that tourism, retail, and personal services will also shrink. So countries of destination will also naturally reserve the jobs of their own nationals. When it comes to prospects here, there are opportunities as well in the health sector. The government needs nurses and other health-related human resource in this pandemic situation. Meanwhile, information technology and business process management sector is also opening opportunities, not just for our locally displaced workers, but also for our returning OFWs. And we also encourage our returning OFWs or those who have been repatriated to also get into business. So we hear stories of success when they turn out as entrepreneurs, use their experience and skills acquired abroad as well. And that is the reason that we are providing them grants as loan facility to be able for them to start their own businesses. With respect to issues on nurses and healthcare workers having opportunities overseas, we are actually not depriving anyone of their right. We are prioritizing everyone's safety as COVID-19 is a public health concern. The immediate response of the government is first reserved to our health workers for our local health system, but we will not stop there. We shall continue to balance between our national interest of protecting our nationals from harm and supporting the global healthcare system. We will continue to work as well with the Department of Health and other government agencies to assess supply and demand, and the restrictions that we put in place, let it be noted, is only temporary. Thank you.
Thank you, Asek Nikki. Can we now hear from BSP on the impact on remittances?
Actually, the latest numbers show a positive development. We've seen that in June, personal remittances actually grew by 7.6% year on year. Then the amount was at $2.7 billion in June of 2020, and this compares to just $2.5 billion in June of 2019. And this is a reversal from 3 consecutive months of decline from their comparative levels year on year basis. And going by the composition of remittances, there was a strong recovery of a 14.2% rise in remittances from land-based workers, whereas that from sea-based workers continued to be affected, and that fell by 13.1%. Now, the year-to-date number now is at a decline of 4.2% in personal remittances as of June. This is a recovery from 6.4% year-to-date as of May. So this is well within our projection of a 5% decline in remittances for 2020. Now, for 2021, we are seeing a recovery of the remittances by about 4%, in line with the long-run trend for remittances. Note that if we contract by 5% this year, then it will still be a partial recovery by 2021. But nonetheless, these latest numbers are in line with our projections.
Thank you, sir. There's a follow-up question from for Secretary Carl from Bea Laforgue of Business World. If the unemployment rate is expected to decline to 6 to 8% next year, may I ask what's your forecast for the unemployment rate in 2022?
The trend is actually a recovery. We do not expect a U-turn at any time. And our assumption lies on the vaccine being available sometime in the middle or third quarter of next year. So we expect by 2022, we would have gone back to our trajectory, which is around 4 to 5% unemployment rate, which is also in our plan target. Thank you.
Okay, thank you, Secretary Carl. We have, I think, 10 minutes more before we wrap up for the closing statement. Let me now go to the next set of questions, or the final set of questions on government interventions and programs from Eileen Menchamos of Abante, and this is for DOF. Interventions involving financial institutions take time to work their way in the real economy, but the effect of cash assistance for consumers, including workers and wage subsidies for companies to avoid letting go of workers, are immediate. Food is a basic need, and it is an urgent need. What played into the decision to prioritize infrastructure and financial institutions over people in the budget? And relatedly, Ralph Rivas of Rappler also asked, with the latest employment figures, will the government now consider cash aid? Also from Warren de Guzman, what are the other programs being considered to generate new jobs? ASEC Tony first, please.
Thank you, Director Narias. On Eileen's question, our first and biggest interventions were for emergency subsidies, actually, and the small business wage subsidy program for 18 million vulnerable families and 3.1 million workers of small businesses. Bayanihan 2 also has provisions for various forms of social assistance and social protection. We also recognize the need to create an economic environment where people can find decent employment that will help them support themselves and their families. Now, these are not mutually exclusive, and the government has programs to address both needs. Investment in infrastructure has the highest multiplier effect in the economy. When we build infrastructure projects, we create jobs directly, and this sustains the families of the workers and the workers themselves and their urgent needs. The multiplier effect from infrastructure projects also helps sustain businesses that employ a lot of people. So we disagree with the I guess the framing that spending on infrastructure is mutually exclusive with spending on people, and actually the focus on the infrastructure program is it did go hand in hand with the social protection programs. Thanks. I'll leave the other questions to the other resource persons. Thank you, Naris.
Asik Rolly, do you have something to add?
Director Neris. Yeah,
okay.
sure. Yeah, as already mentioned again by Asik Tony, under the Bayanihan 2, we've already provided around 18.82 billion to be allocated for the employment sector. So this includes around 13 billion allocation for the Cash for Work program and employment assistance for the DOLE, which target displaced workers and, of course, even the repatriated OFWs affected by COVID-19. And other funds are also been provided in the Bayanihan 2, also set aside from hiring of at least 50,000 contact tracers to be implemented by the DLLG, while around 820 million will be allocated to augment the DFA's budget repatriation expenses. But of course, we're not, of course, stopping from there. As I mentioned earlier, for our 2020-21 budget, we've all even continued to provide for assistance for displaced and for formal and informal workers. Under the 2021 proposed budget, we have the DOLE's Camp and Tupad programs. So that is what we have provided in the budget. Also around 7.44 billion to set programs. Okay. And then at the same time, similar to Bayanihan 2, we even provided for a lot of support for our MSEs. So we'll infuse some 2.3 billion for the MSME development program, some 11.1 billion for also to allotted DOLE's livelihood emergency employment, and the training for work scholarship program of 3.6 billion, and the Tulong Trabaho scholarship program will also be prioritized to promote digital upscaling and, of course, retraining for workers. And not only that, we know for a fact that also in terms of the agriculture sector, where fisheries, farmers and fishers are affected, we even provided prioritized programs that will help improve their productivity in the agriculture sector, which is, as mentioned earlier, also we have provided in the National Irrigation Authority of 31.5, the National Rice Program of 15.7, the National Fisheries Program of 3.5 billion, and the Rice Comprehensive Enhancement Program of 10 billion. And of course, even to promote regional socioeconomic development, we even infused some 3.21 billion for our Balik Provincia Bagong Pag-asa program, which also helped in the decongestion of the Metro Manila. Okay, this will be done by providing transportation, reallocation assistance, and transitory family support package and livelihood settlement grants to 10,000 returning families and receiving community members. So you can expect that from the budget side, we provided a support and assistance for our displaced and even our displaced informal and formal sectors workers. Thank you.
Thank you,
Director
Asik
Neris,
Rolly. Yes.
I just
Yes,
wanted to
Asik
add,
Rolly.
no, Asik Rolly already mentioned the components of the NEP, but also in the Bayanihan 2, a high priority was put on agriculture allocations. And actually, Eileen mentioned a very important point, which is food is a basic need, and it is an urgent need. And we even saw the agriculture sector buck the trend in the second quarter GDP numbers. No, it's the sector that actually grew when the others declined. No, it grew at a modest 1.6%, but it grew nonetheless. No, so since the agriculture sector is certainly an area that needs as much support as it can get, no, given that food will be a priority of households and families moving forward, and we've seen that this has been the case. 24 billion of the 140 was allocated to productivity and income enhancement, social protection, and cash for work programs, specifically in the agriculture sector. Thanks.
Thank you, ASEC Tony. We have Yusek Perry Rodolfo of DTI. Sir, do you have anything to add from DTI?
Sorry.
Yusek Perry, okay.
Naka-unmute na ba ako? Sorry. Thank you very much. From the DTI side, we are working with the task group on recovery that is being headed by NEDA dun sa IATF natin. So we have a program called the Revitalizing Businesses, Investments, Livelihoods, and Domestic Demand, or the Rebuild. It's really focusing on trying to address or to respond to the to demand through local production. So yung ating buy local, starting with, for instance, na narinig na ho siguro natin yung ating repurposing of manufacturing program for the PPEs. So ngayon ho, na alam naman natin ngayon na by this time, ang Pilipinas ho nakakagawa na ng mga PPEs na medical grade and internationally certified. Very important ho for the protection of our medical frontliners, but equally important because they have sabusan ng 20,000 to 40,000 jobs. Pagdating naman sa investments, kagaya halimbawa sa Board of Ends, ang growth ho ng investments natin from January to August of this year is actually 25% compared with the same period of last year. Dahil po tuloy-tuloy naman yung mga pag-invest ng ating mga group sa medium to longer term investment opportunities, kamukha ko sa infrastructure. Kagaya kasama na rin po dyan yung sa ating tele. Ang best promotion at effort po would be of what the DOF and NEDA mentioned earlier is being asked by the House and the Senate for signature ni Presidente. But moving forward, lalo na pagdating natin sa 2021, kailangan po natin that the Legislative Department will already pass the nandiyan na rin po yung Create Bill and really promote the Philippines as an investment destination. And we are working closely with the DOLE tsaka with the Department of Health para may promote natin yung gradual reopening pa ng mga ibang sectors. Because what we have seen with the 10% unemployment, may unemployment pa rin, masama pa rin 10%, but at least it was a drop from the 17.7% figure natin noong April. And as was mentioned by Secretary Carl, kitang-kita ho natin yung correspondence between the at saka ho yung doon sa ating pagganda ng konti ng unemployment rate dun sa mga sector na yon. So we will be working closely with NEDA, DOLE, DOH for the continued safe reopening of our sectors. At saka yung tulong din ho natin sa ating mga MSMEs through the Bayanihan too. Thank you po.
Thank you, Secretary. I think a couple of our reporters would like to ask questions live. Can we hear from Wendy Noble of Business World? Followed by Kai.
Hi. Hi po. This is for BSP officials. How do you think will the latest figures on unemployment rate affect banks' appetite for risk and also their lending standards? Because from the previous quarter, we note that there was tighter lending standards because banks said they were perceiving higher risk because of the current crisis and its impact on bank clients. Thank you po.
Well, thank you. I may start, and then if Deputy Governor Chuchi Funashare also wants to add something later on. Well, now, as we know, the lending standards of banks have tightened, and you can see that that is an offshoot of greater risk aversion because of the uncertainty brought about by the pandemic. But at the same time, this latest number from the labor force survey, which shows a significant reduction in the unemployment rate from 17.7% in April to just 10% in July. Although this is still elevated, still this is a positive signal that should impact on the uncertainty, reduce the uncertainty facing the business sector, and also reduce the uncertainty in bank lending. So this is going to figure positively. And if I may also note that this is in line with what we are seeing in when we look at the Composite Purchasing Managers Index. As you know, that is an advanced indicator of where the economy is growing. And in response to the restrictions, the quarantine restrictions, for example, the overall PMI declined from 53.1 to just 27.1, 53.1 in February to just 27.1 in March. Now, by May, it was still quite low at 35.6%. But then, starting in June, we've seen a recovery to 43.5% and then to 45.0 in July. Now, this is still, there's a threshold of 50 where 50 indicates that the economy is already expanding. So 45 is still below that threshold, but it's now quite close. So this is going to figure on the positive side. Thank you.
Okay, thank you, sir. We can entertain 3 more questions from Kai Ordinario, Ben De Vera, and finally from Twitter. So first, can we hear from Kai Ordinario, Business World?
Sir, good morning po. Kai Ordinario from Business Mirror. First, Secretary Chua. Sir, how will the high unemployment rates in NCR, Calabarzon, and Central Luzon affect the Philippines' GDP in the third quarter? And then second, does the labor force survey include informal workers? How has the pandemic affected them, and does NEDA expect them to fall back or deeper into poverty this year? Thank you.
First of all, the higher unemployment rate, in fact, NCR increase, as you saw from the PSA presentation, basically reflects the quarantine status. As of September 1, the far majority of the country is already in modified GCQ. However, the core areas where we have the biggest share of GDP, like NCR, and 2 provinces around it are still in GCQ. So there will still be some effect on making the unemployment rate slow to decline. And the sooner we can lower the quarantine status, which reflects also our cooperation and how the Bayanihan 2 and the Build and the upcoming 2021 budget are all implemented, then we can see further improvements in the unemployment rate.
Thank you, Sec. Ben De Vera, Philippine Daily Inquirer.
Good morning, Secretary Chua. Earlier, National Statistician MAPA mentioned that they're seeing a trend like in July, the labor force participation in regions outside Metro Manila were increasing, while in faster than in Metro Manila, given the improving job situation. He mentioned it may be because of the Balik Probinsya program, when more of our other Filipinos move back to their home regions. Is this something sustainable? I mean, as you mentioned, Metro Manila and the surrounding provinces accounted for perhaps 50% of the economy. Moving forward, can we rely on the regions to generate more jobs than here in Metro Manila? Thank you.
The Balik Probinsya Bagong Pag-asa program is a long-term program of rebalancing regional development. So that would only be sustainable if we do two main things. Number one is to ensure that the regions are interconnected so that the supply and flow of goods, services, people, investment, and trade would be unhampered. The second is to ensure that the basic services in those provinces are available: water, sanitation, housing, education, health facilities. Those will make this program more sustainable and help in the recovery of our economy. What we know from this crisis is congestion and agglomeration are not necessarily helpful when this pandemic is expected to not resolve itself as quickly as possible. So those will help, and making it sustainable requires building those foundations. Thank you.
Thank you, Sec Carl. We need to wrap up. We can entertain the final question from Twitter before we call on our three speakers for their final statements. From Mel Tapukaw Hipol, will the contract of JOs or job orders and contractual employees from various government agencies be renewed in 2021, given the National Budget Circular number 580? I believe this is for ASEC Rolly, DBM.
Yeah, thank you, Director Neri. Yeah, I don't know if they must have heard from our secretary in the previous interview that yes, as long as the agency needs to hire job orders, they can still do so, because of course that will depend on the needs of the department or agencies. So we will still allow that, given the needs, or of course, as mentioned, based on the needs of the agency. So we can still do that one.
Thank you, ASEC Rolly. We will now have the few final words from DOF, DBM, and NEDA. May I call on ASEC Tony first, followed by ASEC Rolly.
Thank you, Director Naris. We would like to thank our legislators in the House and the Senate for ratifying a version of Bayanihan 2 that is fiscally responsible. As you probably have seen in the numbers, the largest appropriations are made to GFI, capital formation, health, and agriculture, in line with the strategy to beat COVID-19. Also, one of the things that we really need to focus on is an evidence-based and a data-driven building of confidence, so that we can get back as much as possible to productive activities that will sustain and create jobs. And that means that we have to cooperate and all do our part in following the health behaviors, the wearing of the mask and the face shield, watching our distance, washing our hands frequently, disinfecting items on a day-to-day basis. And then with the other interventions that have been mentioned, more and more of the economy will start picking up. So really, I guess the call is for everyone to do their part, because it will protect ourselves and our loved ones, but also because it will give us that sense of renewed confidence to go about the economic activities that will help us recover in the quickest possible time. So thank you very much.
ASEC Rolly?
All right. Thank you, Director Derry. Okay. Even before the COVID-19 pandemic struck the country, so our government has already been the forefront of responding to the needs of our workers. Okay, so with the onslaught of the pandemic, the relevance of assistance for our workers has been an even more apparent. So as we strive towards making a better normal, we will continue to support and even promote initiatives that will support our workers. So through the provision of programs, activities, and projects that is being supported and provided an allocation in the budget. So we guarantee that the budgetary support is set aside for next year to support our workers, in particular who are displaced right now. We hope that through this, we'll be able to help the Filipino people adapt with the transition of the post-pandemic life. So thank you and good morning.
Thank you, ASEC Rolly. And finally, Secretary Carl.
The virus is here to stay. That is the reality, and we will have to live with it for some time. However, we know that there is a lot that each individual can do to prevent the spread of the virus. We all know about the minimum health standards, physical distancing, wearing of face masks and face shields, frequent hand washing, proper coughing and sneezing etiquette, and frequent sanitation of spaces and high-touch surfaces. We would like to stress that these practices should be done 24/7. We have observed that much of the contagion happened among family members. This means that even though we observe the minimum health standard when we are outside our residence, we let our guard down when we get home. If we are conscious about our health and safety when we go outside our homes, we should equally be concerned that we do not compromise the health and safety of our loved ones at home. These individual actions will add up significantly and will spell the difference between life and death, sickness and health, and recovery or decline. Thus, the call for the whole of society to unite against COVID. Thank you very much.
Thank you, Secretary Carl. That concludes our press conference on employment. On behalf of the economic team, we would like to thank all our friends from the media, colleagues and officials from BSP, DOLE, DTI, BOI, DBM, DOF, and NEDA, and our online viewers for joining us today. Mag-ingat, magtulungan, at mabuhay tayong lahat. Salamat po.
Thank you.